esta noche de sobre Lundigo. Lucas, my Spanish lessons are paying off. Bienvenido, Ecuador. This is the newest Lundin company, Lundin Gold. I think the formation of this company shows why this group can provide tremendous returns for shareholders. This started out as a luncheon Lucas had with 2 personnel from Kinross in May of last year. We got the phone call, a few of us, to start looking at it later May. First trip to Ecuador was in June with Lucas to meet with the government. We then proceeded to start raising money, close the deal, do the things, the due diligence that's necessary. We pulled teams in. I was running a uranium company for the last 14 years for the family. Now I'm running gold. You'll see names that you've probably seen before. We've been taking a few people, recruited a few from Williams' team and other groups within the Lundin group, and we've added a few new people as well. But it shows, I think, the strength of the group to move quickly when we see an opportunity, the depth of the group to be able to bring resources together to pursue something quickly, and now the team that's put it together to see this through to fruition over the next 18 months. The lawyers, yeah, there you go. Fruta del Norte, what is it? Well, it's one of the best undeveloped gold deposits in the world. And I think you'll see, agree with me after I get through with this. So in summary, what have we got? Well, we've acquired a deposit in Ecuador that is roughly about 10 million ounces, average grade just under 10 grams per ton. One of the richest gold deposits in the world. Some of the drill holes, when they drilled this in 2006, 2008, 235 meters of 35 grams per ton. This is one of the most continuous, compact ore bodies known today. We're going to be able to move quickly. We acquired this in December. We're going to be producing a feasibility study in the first quarter of next year, making a production decision by the third quarter of next year, and hopefully be producing our first gold by late 2018, 2019. The deposit is very compact. It can support a very small mine, but will be one of the largest gold producers in the world, producing over 500,000 ounces. We not only acquired this deposit, we also acquired 35 other concessions along a corridor in southeastern Ecuador. Kinross, who was the seller of this, had done significant exploration work prior. They'd actually permitted 2 areas, cut the drill pads, were all ready to go when they made the decision in June of 2013 to leave the country. When we acquired it, essentially they gave us these 2 binders and said, here you go drill. It was they considered it, their VP of exploration considered it to be the best exploration prospects they had in their company at that time. We've pulled together, I think, a good management team, and above all, we're hitting Ecuador at the right time. It's kind of good, nice to talk about this because Keith talked about oil prices. Ecuador is a member of OPEC. It's the smallest member, produces about 550,000 barrels a day, but its economy was very much tied to oil. When we first went down, oil prices were in the 70s, and they still were okay then, but since then, obviously, oil prices have fallen significantly. The economy, they realized they must diversify their economy. It's really oil and agriculture. They produce bananas and flowers, cocoa and shrimp. But they need to diversify. The pressure to diversify is even greater now with where oil has dropped to. So where are we at? This is Ecuador. It's quite a beautiful country, actually. You have the Amazon region here, the high Andes that run through, the coastal, and then what you can't see off that map are Galapagos. So 4 main regions of Ecuador. We're down in the southeast border, only about 10 kilometers actually from the Peruvian border. To get to the site is actually quite easy. There's very good highways from the project here all the way through to the coast. We have daily flights from Quito down to Loja, which is the 4th largest city in Ecuador. Actually hosts 2 universities as well, so it's going to be a very good source. We're actually already signing an agreement with one of the universities to start training programs. And then it's about a 4-hour drive along paved highway and about 40 kilometers of gravel road to get to the site. Ecuador is one of the fastest growing economies right now in Latin America, and the World Bank is projecting it for it to be in the top 5 over the next few years. It is, though, you can see, pretty low on foreign direct investment. That's why they need mining. That's why they want mining to come in. There's two potential projects, ours, and one just to the north of us called Mirador. It's a large copper porphyry. Ecuador in 2000 left the Sucre, and now it's a US dollar-based economy. So we have no currency risk. Everything we do is in US dollars. And they're getting very aggressive when it comes to mining. There is a typo up there. Actually, the mining ministry was just formed in January of this year. Previously, mining was a sub-ministry underneath the oil and gas. Now it's a full-fledged ministry. They implemented a mining law in 2009, and then they've been continually refining that and improving it. And the president actually hired a firm, Wood Mackenzie, to look at and try and evaluate how competitive, make their mining fiscal regime and mining law more competitive with countries like Peru, Chile, and Colombia. That effort is underway, and we anticipate seeing more changes to the mining law coming about later this year. We have a couple things we have to work with in the government. The exploitation agreement. Again, Kinross had taken us through almost to completion, so what we now have the opportunity is just to kind of refine it. We don't have to start from scratch. This one here, actually, we're rethinking this. Canada and Ecuador have a very strong multinational treaty that provides for investment protection. We may decide that this is less risk, let's just go with the Canadian treaty. We are a Canadian-based company, and so we can work under that treaty. So this one we may actually decide not to go at all. This is our concession block. As I mentioned, 36 cash concessions, 86,000 hectares. The deposit is just situated here. Here's the Peru border. The other mine that's going in is right here. It's a very significant property position. The two things you got to worry about when it's out of Latin America, you may have heard of when you see other projects such as Tambo Grande and a few others, are relocation and surface rights. Kinross had already acquired all the surface rights. We have all the rights we need to build the road, to build all the facilities we need. We don't have any worries about that. We own that land. The other thing is relocation. We have no communities. The nearest community is about 10 kilometers away. And it's a small community. We have, I think, 30 communities of 200 to 500 people within the area, which will provide good labor, but we have nobody that we have to relocate. So those two risks, surface rights and relocation, we don't have at all. This is the deposit. This is a planned section through the deposit. It's only 1.7 kilometers long. It's only about 350 to 150 meters wide, and it's about 250 meters in depth. On a long section, you can see here is topography. So here, these are 50-meter blocks. We're only about 40 meters below surface. So this means it's going to be, we're not talking about a big shaft or anything to come in. Essentially, it's going to be ramp access. And this ore body, this is where most of the resources, and the next slide is where we'll get to the real juicy bits. The resources are here in this small area. It's open at depth and open to the south. This is actually a portal that Kinross was driving. They got in 600 meters when that decision was made in June of 2013 to walk away. Why they were putting this in was actually to do exploration on this southern part, and also it was going to be secondary egress for the underground mine. Mine workings are going to come in here from the north, much closer. We're actually doing the permitting right now, looking at reopening that. We may go in and use that as secondary egress. It may help speed up our development and provide us with further exploration upside. But this is the resource. You can see that it's very small in terms of tonnage, but very high grade. Our indicated is 9.6 grams per ton. And that is at a 2 gram per ton cutoff. I've seen block models where we've increased that from 2 grams to 18 grams per ton, and we still have about 35% of the gold. So there is some very, very high-grade components of this mine. And that's what's going to enable us to be able to mine at very high production rates, but very low mine rates. So total, we're looking at just under 10 million ounces and about 15 million ounces of silver. When you put that up amongst the other undeveloped gold deposits in the world, it is the largest and one of the highest grade undeveloped gold projects right now known. Talking about the upside exploration, again, this is work that Kinross did, and this is a little bit further to the south of the Fruta del Norte deposit. Fruta is right up here. This is airborne that they flew. This one right here in Parador has got us very excited. This is what's called an epithermal deposit, Fruta del Norte. So what it was magnetic fluids that were coming up multiple events. They estimate, the geologists estimate anywhere from 8 to 10 events. That's why it's so high grade. And because of the faulting, it's so intense. We see the same sinter, which was at the very top of the deposit in Parador. None of these have been drilled yet, that surface expression. And we're looking at maybe drilling these this year, possibly doing some drilling up here, but definitely some further exploration between this year and next. This is a project, though, that's just not a resource. Aurelian and Kinross have spent $280 million already on this project. Now remember what Lucas said earlier, we bought it for $240. So when this was first discovered in 2006 by Aurelian, their first hole, 237 meters, 4 grams per ton. Kinross acquired it in 2008, and because our presentations are on our website, we don't like to rub Kinross's nose in it, but I can tell you they paid $1.2 billion for it in 2008. They then proceeded to put over $200 million in it in drilling, pre-feasibility study, a feasibility study. They realized that this actually wasn't feasible. It was a pressure oxidation circuit, very complex, needed 5,000 ton a day of ore to be fed to it to even try to make it economic. That ore body's not big enough to do that. Mine plan wasn't feasible. So Kinross actually started looking at reducing the throughput rate and going to a much simpler flow sheet, and that's what we're doing. So 3,500 ton a day, so a very small mine. And looking at what's called now GFL, a gravity flotation leach. 30% of the gold we're going to get right off the very first circuit, right off the gravity. Then we'll run a flotation process, very simple, pull a concentrate, which will be mostly gold and silver, and we'll sell that to smelters somewhere in the world. And then we'll do a leach to get a final recovery. Very simple flow sheet, significantly reduced capital. And also the mine, much more flexible, very typical long hole stoping mining methods. We're going to use paste backfill, we'll put most of the tailings back in the mine. Very little construction risk or operating risk. This is some photos. It is a beautiful area. We're at about 1,400 meters. This is the camp, 250-person camp, dense rainforest. I think Lucas tried to walk off here somewhere, but didn't get very far. This camp is in very good shape. We're actually up to about 200 people right now, main camp. This is the 150 kilometers of core that's been drilled in the area. And this is the portal entrance, the south portal that I mentioned. We're just looking at reopening this. This is the proposed plant site and tailings area. You can see it's very dense rainforest. It's rainforest, but it's actually not that bad. So we're at 14 to 1,500 meter elevation. So we have no mosquitoes, we have no issues with malaria. It actually is quite comfortable. It cools down in the evenings. It can get a little warm. The only issue is we have 3.5 meters of rainfall a year. We're at the equator though, so it's not like we have a rainy season and a dry season. We just have rain every day. Just not sure how long it's going to be, whether it's 12 hours a day or 15 minutes, and then the sun shines. But that also is very good for planning, for construction and everything. It's not like you have to really worry about where you get 3.5 meters in a couple of months, which is where you can have that in parts of the world. And then a dry season, so everything has to be done in the dry season. This is, we get lots of rain, but it's very easy to design for it. This is some of the infrastructure. So I mentioned we're going to produce a concentrate. So the project, you can drive on very good highways. Over here at the Boulevard Port. That's a photo of it there. You can see there are 4 ships docked there. We don't have to do much work here. And the concentrate, we're not talking about a lot of concentrate. We're going to have to build a big concentrate loadout shed and all those types of facilities. This is going to be shipped out in sea containers and bags. It's not very much. This is the highways throughout Ecuador. Correa, over its last 7 years, has put a tremendous amount of money in power and highways and airports. such that it is pretty easy to get anywhere in this country. So what are we doing right now? We have a 12,000 meter drill program. This is one of our drills, our Ecuadorian drill contractor. The drilling is not for the resource. It's purely to provide for the feasibility study. Some metallurgical work that we're going to do that's actually underway in Santiago. We're doing some geotechnical, hydrogeology, civils. Really just in order to make us feel more comfortable about what we're going to put in the feasibility study. We've got a team that we've been really lucky at timing. We've pulled a team together in Latin America, and prior to this, most of the engineering firms have laid off well over 50% of their staff. So the staff that are left are the stars. We walked in with, we want to do a feasibility study. We've been able to put some very good teams together. So AMEC Foster Wheeler is leading everything out of Santiago. NCL is a mining company. They did all the mine planning for Kinross, so they're very familiar with the project. They're also Santiago. Cole and Cripper Berger out of Lima is doing all the tailings. And SRK are doing geotech, and Patterson Cook out of Sudbury, Canada are doing paste. So we've been able to pull together a very good team. The other key component is, in Ecuador, they have the mine license and the mill license. So it was two separate licenses. Because Kinross was looking at changing their mind on the way they were processing it, they stopped the mill license. But the mine is fully licensed. So if we wanted to today, we could say we're going to start driving the drift in to go start exploiting the ore body if we wanted to. What we've been able to do to minimize the risk is convince the government, let's just make it one EIA. So this one's still in place. We're just going to amend it now to include the plant. That's significantly less risk than saying you're going to have, you've got this other one, but you have to start from scratch for the plant. So we've minimized the risk, and this is all well underway. We have baselines that we had to update, but this is, we're looking at probably about a year's work in order to get this amendment through. So this is our timetable. We closed the deal in December. We're on the 17th, because we had 18 months from the day we closed. So on the 17th of every month, there's an email that goes out from me to every one of the staff that it's another month that's gone by. I think everyone's going to get an anniversary card on June 17th of this year to remind everyone we have 1 year left. But the team's doing a great job of pulling it all together. So we submit our phase change application in June of 2016. The government has 60 days to approve that. Then we move forward. We're already actually starting work on financing. And first production late 18, early 19, at roughly about 500,000 ounces a year. The other aspect that Kinross did a very good job, and it's very important in many countries in Latin America, is community social responsibility. Their program that they had set up was top-notch. Enabled us to just essentially step into their shoes and keep it going versus having to try and build something where there was bad relationships. So we're doing a lot of work here in environmental responsibility, social responsibility, and artisanal mining. Currently, we have 5 analysts that cover us. 3 more are to pick up coverage here. You can see that on a consensus basis, we're currently at about $3.75 a share. Target is $6.40 a share. All have outperforms or buys. You can see roughly where they're looking at right now where this project could be. This will be one of the lowest quartile gold producers in the world by 2019. Management team, the board, Lucas, myself, Carmel Danielle from CD Capital, they were big investors. They put $40 million into the original deal. Ashley Heppenstall, who many of you know. Ashley's just joined the board. He's raised a lot of money from debt, so he's going to be a big asset in order to help us through that prospect. Paul McRae, Lundin Mining, he just built the Eagle Mine for them, so he has probably one of the better construction managers. And Pablo Mir is a lawyer that's been working with the family for 20 years. He's Chilean-based. He understands Latin American legal systems. He understands the way the Ecuadorians think. And interestingly enough, the advisor to the president of Ecuador on mining issues is a Chilean. And him and Pablo know each other quite well. So it works out very well. That's been a big help for us. The management team, Chester Seed, was one of Williams, started with Lucara, and he's now CFO for both us and NGX. Tony George studied and built the Caraway mine. And I've known Tony for 20 years. He's probably one of the best feasibility study managers I know. He's also very good at operations, so he's able to bridge when we're designing something. He knows what he's got to potentially operate with. Nick Teasdale's new to the group. He came from Barrick. And Nathan Monash is new to the group as well. He spent most of his career actually with the IFC and the World Bank, but also worked for Rio Tinto and Anglo in Colombia. So he's really responsible for all our sustainability efforts. And Sheila Coleman's been with the group for about 8 years now, very strong on the legal and corporate secretary. So in summary, it's a great ore body, it's a great opportunity. We're able to pick it up for the right price. We've been able to pull the management team together, and we got a pathway in front of us. The key is working with the Ecuadorian government. As Lucas mentioned, I've moved to Quito. Most of our management team is going to be based in Quito. We're doing everything we can in Spanish. We're doing, all of our lawyers are Ecuadorian based, our communications specialists are Ecuadorian based. We're making this an Ecuadorian project, and that's going to help us a lot to see this through and work with the government to see this thing through to fruition. Thank you. Muchas gracias. Buenas noches.
Made Kinross cease their development?
It was a combination of things. It was the government at Ecuador at that time had high oil prices, so they didn't see mining as a real need for the economy. Also, at Correa, when he started, was following very much the Chavez and Morales, very much left-leaning model. So his first mining law came out, it was very left-leaning. So Kinross had a lot of work to do to convince them otherwise. They did that. A couple things, personalities. If you would put it right down, a couple things, personalities. Their negotiating team continued to come out of Toronto. Their legal team was out of Toronto and New York. And everything else was done in Toronto. It really came down to, Kinross did a lot of very good work and moved things along, but it eventually got to a point where there was just a lack of trust and a lack of a good relationship between the two. At the same time, Kinross also faced some difficult decisions. They'd acquired Redback. They had Tassia sitting out there. This one has a short timeline. They really had to make a corporate decision, Tassia's or FDN. Given their poor relationship with the government, the tight timeline, they made the decision that they want to start focusing more on Tassia's.
Tack så mycket. Har vi någon mer fråga till Ron? Här har vi en fråga till. Kommer en mikrofon här också?
What about the tax conditions expected for when the production is going? Can you say something about that?
Yeah, the tax conditions right now, the Ecuador has a 22% corporate tax rate that now has been codified in law. They have a royalty codified that's between 5 and 8%. Kinross had negotiated a sliding scale that would be 5% up to, I believe, $1,500 an ounce, and then up to 8% at over $2,000 an ounce. That's something that we are going to be working with the government and trying to renegotiate. They also have a profit sharing, which is almost like another tax. 12% goes to the government, 3% goes to the employees of the after-tax profits. Now, what's very good about Ecuador, though, is both the royalty that I mentioned and the profit sharing are shared with all levels of government. So what's called the GADs, or the local governments, the provinces, and the feds all get a piece of that. So that's very good. The other thing that was the key was the windfall revenue tax that was a lot of grief for Kinross. The government has changed that. Now you can recover all of your capital before that even kicks in. And they've now set the price at a sort of what's called a 10-year moving average plus 1 standard deviation. So the chances of that ever actually being in place are quite small. In addition, Correa has now said several times that he's considering eliminating the windfall tax. That's something hopefully we'll hear this fall. But when you look at it, when you compare the tax regime that we have in Ecuador relative to many other countries in the world, it's a little bit higher, but not significantly higher, and it's even in some cases relative to some provinces in Canada lower.
Tack så mycket. Vi tar en sista fråga här innan vi går vidare med nästa presentation. Och sen finns vi kvar för att svara på fler frågor i pausen.
I would like you to deliberate on the calculation before you get break even. What kind of gold prices do you need, and what is your strategy about hedging and so forth? If you could deliberate on this.
On what gold price we need to break even?
Yeah, before you get all your costs for the project, retreats, it's what kind of gold price do you need to secure that you will? Yeah.
Well, one of the advantages of this deposit is that based on Kinross's mine plan, we're evaluating it. The average grade in the first few years was pretty close to 15 grams per ton. So if we run our model right now based on analyst consensus, which is about $1,200 an ounce, we're paying this thing off in a couple of years. A lot of people ask me, well, what's your forecast on gold price? And my answer really is, I don't care. Because it is one of the best, highest grade deposits. We're able, it's unique in that usually, you know, Keith talked about the reserve gods. Usually the reserve gods put all the high grade at the bottom, so you got to mine and work your butt off to get to that really juicy stuff. This one, actually, the high grade is right at the top. So this is a perfect mine for getting in, recovering your capital, making a significant amount of money in the first 5 years, so that then allows you, this Lundin Gold is going to become the new vehicle, gold vehicle for the Lundin Group. We're going to be 100% focused on this to get it up and running. But then this is going to generate significant cash early on. Because our operating costs, we estimate our operating costs those first 2 years are going to be between $400 and $430 an ounce. So $1,200 of gold, we're making a fair bit of return on our capital. And then this is going to allow us then to start looking at building, both in Ecuador, but in other parts of the world, the gold business for us again.
Tack så mycket för bra frågor och för svar på dem. Så att, next